Your finances are important, and with so much information out there to know, we want to help. I'm Natasha Lubchenko. Welcome to Money Wisdom, sponsored by Johnson Brunetti. We're educating you about smart ways to manage your money. And joining us is Eric Hogarth, certified financial planner and Johnson Brunetti partner. Hey, Eric, great to see you today.
Hi, Natasha. Nice to see you.
All right, so today we are talking about building a house, a financial house. I like this analogy. Break it down for us. Why does it make sense for us to think about our financials in this way?
Because there's steps that you have to take. And it's exciting to talk about, should I be buying GameStop stock? Which the answer is probably no. But you have to start with the basics. You have to start with the safe stuff. You have to start with, I hope worst case doesn't happen, worst case scenario, but it could. And if it does, are we going to be okay? So one step at a time when we're talking about building the financial house.
All right. And so the first step in building the financial house is the foundation, which you say are our protected assets. Talk to me about this.
Yeah, you start with the safe stuff, with the stuff that you're going to build the whole rest of it on top of. And, you talk to people and they'll be like, I really don't want to have any money in the bank. The money in the bank isn't doing anything. Yes, it is. The money in the bank is not growing because sadly, that's not what money in the bank does, but it is doing something. It's providing you with liquidity and money that if you have an emergency, you don't have to touch the wrong money to get at it, or worse, create debt. You've got that cash in the bank. So when we talk about foundation, you talk about stuff that cannot lose money. Savings, maybe CDs. We'll talk about that because not a really exciting thing to talk about right now. Maybe you look at fixed annuities. Maybe you look at insurance. A lot of younger people, we spend all day, every day talking about retirement planning, but you talk about a lot of younger people and they don't have enough life insurance. I don't want to die either, but you do see those stories that something happened that wasn't supposed to happen. Someone had little kids, they had a mortgage, they died too soon, and now their family, in addition to that tragedy and that mental anguish, well, now you have a financial hardship that was pretty easy to protect against. So start with the safe stuff first.
Yep, it might not be the most exciting, but definitely you need the foundation. And now here we have the walls of the house, which you say are assets with limited risk. Yeah,
so now we can go up the ladder a little bit. We went from no risk in the foundation, it's got to hold the whole thing up, to now the walls. So now you start to look at things, I can't keep all my money in the bank because it'll be worth the same amount it is now next year. I've got to start getting growth. So you start looking at things that have a little less risk. And depending upon your phase of life, it's also relative to your comfort level with risk. I mean, I can tell you, and good advisors can tell you, well, historically, this is what's happened, and this is probably what's going to happen, but you don't know how you're personally going to process that. None of us want to lose money, but those people that are kind of more seasoned in it, they're not surprised when the market goes down, because it does. And long-term, it's probably going to go up. But so you start with things that have limited risk. Maybe you look at bonds, which are based on interest rates and not that exciting right now, but they're earning more than the bank. So talk about that stuff next.
All right. And then next, we're going up the ladder one more time, the roof, which are assets with greater risk.
Yes, you need growth. And everything I've described to up to this point is really not going to grow. And it's relative to your comfort level and your timeline and how much money do you need. But most of us either need or want growth. So if you look at things like stocks and mutual funds and exchange traded funds and any number of other things that are out there, they're all designed to give you more growth, but they go from having a smooth line to something that's a little more like that. It's why 401ks are such a big value to younger workers, because you always save money into it over a long period of time and it should go up. There's no guarantee to that. And that's why you have to make sure that you're doing the foundation and you're doing the walls and you're doing the more conservative stuff first, because there's going to be times that maybe you need money and the market's not the place that you want to take it from if it's, if your Apple stock is down 20%. So it's balance. Like everything that we talk about, it's balance. It's not, well, everyone should do this or everyone should do this. It's that everyone needs a balance, and what someone's balance is and what they're comfortable with is different for everyone.
Absolutely. I love thinking about it in this way. It's really a good stepping stone. You make sure you hit this one and that one and that one. So what offer do you have for our viewers to learn a little bit more about this and building their own financial house?
It's called almost exactly that. So it's called Building Your Fiscal House. And it walks you through these steps and goes through a couple points on each of, well, this is what's there. And these are the things you should be thinking about. And another commonality across this, you got to be critical of, what am I paying? What am I getting and what am I paying? And does that make sense? You start talking about mutual funds. Some of them cost very little. Some of them cost a lot. Some advisors cost a lot. Some cost very little. Some of the ones that cost very little aren't that good. Some of the ones that cost a lot aren't that good. So what am I paying is another important part. But so it's a free book. It's Building Your Fiscal House. You can get it at moneywisdomtv.com, absolutely free. Encourage you to read it. Again, it's Building Your Fiscal House, which is very specific and unique to you. And you can get it at moneywisdomtv.com. And I really encourage you to read it. And I can't see reading it hurting anyone. You know, information, education never hurts.
Definitely not. Eric Hogarth from Johnson Brunetti, thank you so much for that great offer. And again, if you guys at home would like to learn more and to receive this offer, go to moneywisdomtv.com. For CT Style, I'm Natasha Lubchenko, and we'll see you here next time.